like just like last time, it was cutting off. So I arrived here and I was trying to set up the MT5. That's why I came in 5 minutes late. So I apologize. Okay, perfect. So let me start. And along the way, I will try to activate my MT5 platform so that I can share it and we can start application. Okay? Okay, great. So team, we finished last week or last Friday by talking about what are the benefits of online trading. And I think most of you now are aware of what a contract is, how to calculate the pip value, what is a margin, what is a free margin. So here is just a quick summary overview for anyone who came in and new or late. Also, team, I have created a group where I was sharing a broadcast message on. So I think some people were missing from who didn't receive my messages. Please let me know in the box here because I was sending a broadcast message starting last week when we finished. Okay, Hussam, it seems like your number wasn't the one on WhatsApp because I tried all numbers. So if you can please, Hussam, I'll just write your name down. I'll take your number when we finish the session from the login. Okay, and then Majid as well. Okay, Majdi, Ayman. Okay, Ayman, sure. I'm sending actually the recording when I'm done. And then I'm also sending the upcoming webinar dates. Okay, Ayman. Okay, perfect. Yeah. Let me go on so that we don't waste a lot of time. I'll recap a little bit of what we talked about last week. So we talked about what is a leverage. We defined what is, first of all, we defined what the Forex market is and how there is always a seller and a buyer for it to be as volatile and as high in volume as it is nowadays of 5 trillion volume per day. Okay? Okay, Haytham, sure. Now, we moved a bit forward to learn how the currency pairs work and how to actually, what are we buying, what are we selling? Usually we said the currency on the right is the currency we're buying or we're selling, which is usually the stronger currency. By default, it's usually a stronger currency. It might not be, but usually that's the norm. We also moved to talking about margin trading. The advantage of this platform, as we said from the start, that you can take advantage of the prices moving upward or the prices moving downward. So a lot of people have this question in mind: how can I sell something that I don't own? The thing is, you have your wallet, you have your capital. You are not owning the euro or you are not owning the gold. What you're doing is you're anticipating that the price might go up, so you make gains from the price, from the change difference in price, or you anticipate that the price is going to go down. You can make the profit from the prices going down. So that's another advantage of using an online platform. Otherwise, you just buy gold and put them in your home and then sell them when the prices go up. So the advantage of this platform is to also use it to sell and make profits from selling. Okay, hello, George. Nice to have you. So I just get started and I was briefing the previous session. Okay, we also took example about different types of leverages. You have 1 to 30, 1 to 50, as you can see in the sheet in front of you. And we took examples to see how to calculate the margin, free margin, and then the margin level. Okay, so basically, the first thing you do, you want to enter the market. Now you know the ins and outs of it, at least 20 to 30%. You want to get into a trade because today, to be honest, it's a very important session. Not only I'm going to be applying on the platform and talking about pending orders, I will also talk about risk management. This is something very important. You all need to know about it. To be honest, I should have done this session alone. Risk management needs 2 hours alone by itself. A lot of nice, interesting topics to learn and how to manage your portfolio. But I will talk briefly about it. Maybe next time we go condensedly into risk analysis more or risk management more. Okay. So the leverage of 1 to 30. Let's say right now I decided with my company that I will take a leverage of 1 to 30. A leverage magnifies your profits and magnifies your losses. A leverage is usually any dollar you put, you get 30 times purchasing power more than the dollar. Okay. So if you have if you started in your bank account with $10,000 and you decided to open a trading account, you decided with your company that you're getting a leverage of 1 to 30 or 30 to 1. So every $1, you get 30 times this purchasing power. Okay? And then what this means is that you can actually trade, or you can actually use it to control $300,000, because that's 10,000 times 30. So you can actually control in the market 300,000. And we said, team, that one lot of a currency, the volume of one lot of currency, 100,000. So with 300, you can actually control 3 standard lots. Okay? Do that because that's you're putting all your money in your account so that you don't have any risk averse in this. You're just always on full board with all your 3 standard. So that's why I always tell the people, one of the major risk management techniques is to make sure your margin is only 25 to 30% of capital, okay, or of your balance. So what this means is, if I started with $10,000 today, okay, if I started with $10,000 and I have a leverage of 1 to 30, so I can open with $3,333. I can control 1 standard lot. So my free margin in this case is the 10,000 minus the 3,300. Okay, so that's the example we talked about last time. That's why I'm going fast here. So my free margin is 6,700 right now. Okay, so this is what can tolerate the ups and downs in the market, the 6,700. In this example, I am using 30% of my capital. I prefer, at the end of the day, it's your choice. I prefer not to open another lot. When you close this lot, then open another lot. This is a way to manage your portfolio. Your margin, that's the $3,000 that's locked to control the $100,000 euro against dollar, is locked right now, and that represents 30% of your balance. That's it. Otherwise, you can open mini lots, 0.1. You can open 10 mini lots, 10 0.1s. You can go with euro, you can go with pound, you can go with yen, any other financial instrument. Okay? So this is basically the recap of talked about last week. And then we also jump a little bit further to say that the PIP calculation is different than in oil and in the index. Okay? The PIP is usually after the decimal point in currencies. That's your PIP value, okay? And the value of that depends on the size, volume. If you're taking 1 cent, your PIP is $10. If you take a mini, your PIP is $1. Mini is 0.1. So 0.1 is 10,000 euro. You're controlling 10,000 euro against your dollar. Okay, so I hope everything is clear so I can move on, team. If you have any questions, please go ahead and type them in, because that's the basic of the trading. Everything else is just ways to go about maximizing your profit, minimizing your losses, and trying to apply with a good risk management strategy. So let me know if this is clear to all of you so that I can move forward. Okay, we also talked about briefly, we also talked about that a 1 lot in currency is different than a 1 lot in gold, different than 1 lot in oil. The 1 lot of gold is 100 ounce, while the 1 lot of ounce, 1 lot of oil is 1,000 barrels. So these are, I am explaining this, but you have it on the platform. It's not rockets, it's there, it's present there. When you put 1, you can see directly that it's associated with 100 ounce or with 1,000 barrel or 100,000 currencies. It's always there. So, and even now, calculate our profit and losses, it's also there on your platform if you're using your calculated in front of you. Okay, but we will also talk about the calculations of this. So I think it's clear. So I'm gonna move on. After this introduction, I'm gonna now tell you what our session today will be about. We're gonna learn the market and the market execution and pending orders on MT5 platform, okay, based on the report that you should be receiving. If you guys have an account with CFI, you should be receiving a technical report on a daily basis twice, okay? Morning and evening. Okay, now I'm usually sending the morning one on the group that I created with you guys, but if you want a bit more insight, let me know, or you can speak to your account manager. Or if you still don't have an account manager, just learning about the whole platform and interested in this, also let me know so we can take it a step further. Okay, so we're going to finish the first topic about MT5 and application, and then what are the orders on this platform and how to really understand when I want to execute on the market price, or I want to put a pending order that is not going to execute on the spot. It will execute on a price on a future date that I will specify on the platform. So this, when you first learn what MT5 and how to use its tools, this is your first tool for a successful trade. Okay, so today I'm going to give you a tools for successful trade. So when you learn this platform, you're into 50% on an advantage. Okay, second thing, we're going to learn some rules of risk management. I'm telling you, this is a very, very important topic. I was going to make a whole session for it. There are some basic rules and advanced rules that you need to learn from risk management. This is of course includes stop loss. Some of you already know what a stop loss is. Some of you already know what I'm talking about, but still it's very good if you learn one bit of a thing from this session. It will be beneficial for you, team. So we're going to learn some rules of how to manage your risk, how to have a mindset of I'm not in there to just maximize my profit and make a one shot, like I'll take 10 lots or I take 100 lots and that's it. That's my one time thing, either gain or lose. This is a luck. We are not here for luck. We're here for education. We're here for management. We're here to make side investments and to take advantage of the market to our benefit. Okay, so we're trying to minimize the risk and maximize the return in a way or another. Okay, as much as we can. Then the third point I'm going to talk about briefly, also we'll have another session about this, our market trend. We need to specify anytime we decide to enter entry points in the market, we need to specify the market, or we need to, you look at the chart. The first thing you do is make sure you know where the market is going. If the chart is going downward, then it's the downward market trend. If the chart is going upward, then this financial instrument is going upward. People usually have this mindset that, yeah, now the prices are high, let me sell because everyone will be selling soon. But the price is still going up. No reason for it to go down. Same for oil. Everyone started buying when the prices started hitting 5 and 4 and 3. No one thought it will ever get zero. But no, the trend is going down. No indicators that the price will go up. Why will I buy? So no demand on oil. Inventories are full around the world. Why will there be any sound is not clear? Can you guys please confirm that the sound is clear? Because to me, I mean, nothing changed the minute I started. No picture. Intermittent voice. All clear from me and good picture. Okay, great, Richard. So thank you for the clarification. All clear from me. Great, Hussam. Clear sound. Perfect. So please, you guys, restart the session. I'll type here. Restart the session. Okay. If you can please restart your session for a clear, might be an internet issue. Okay. Okay. So just want to tell you, I forgot to mention something for you, whoever joined now or whoever started. Richard is also the CEO in our branch in the UK. He's with us in this session as an attendee. So he's there, he's listening, he's making sure that everything is right. And also he's helping us with any questions you guys have that I might not be able to answer. He might catch up and get in there. Okay. So hi, Richard, and welcome to our session as well. And please feel free if you want to ask him, if you want to ask anything that I didn't talk about, he can always help you. Okay, perfect. Perfect. Okay, thank you, Richard, and hi to Muhammad and Swati as well. Okay, perfect. We need you guys. We always perform better when we work as a team. So thank you for being there. Okay, so back to our main topic, which is the tools for success. As I told you, we need to specify a market trend to enter when the market is moving in a certain trend. Okay, and then the fourth tool, which is very, very important, we're also going to have an extensive session about that, which is technical and fundamental analysis. These are very two basic big topics that goes under risk management, okay? Because at the end of the day, I know how to use the platform. I know how to buy and sell. What should I buy and sell? Like, what am I going? Why am I buying euro? Why am I selling gold? Why am I buying oil? These whys you can only answer them from technical and fundamental analysis. So fundamental analysis and technical analysis are like two big umbrellas that are part of risk management that can affect my decision in the market. Hi, Muhammad. Nice to have you too. So that can affect my decision in the market. Fundamental analysis, I will talk about this in more details. It's everything that has to do with the economy, politics, anything that, when Trump goes on and says something, the market reacts directly because, as I said before, the economy in the US has a very high, it has a lot of control on other economies, and the decision making of leaders there, was it the central bank or was it the president? It affects a lot the instruments that we're working on. Okay, so these all fall under the category of fundamental. There is another category that's technical, which is usually pure numbers. It makes us predict and plan our trade based on numbers. So combining those two, along with understanding the tools that the MT5 provides and the orders there, and specifying a market trend, we can try to minimize our risk. Clear? Okay, I'll move forward now, team. Let's start with the big umbrella, is learning how to use the MetaTrader 5. I will try to log into the platform and then share my screen with you, because I think at the moment the screen is login. At the moment I am offline, so I will try to connect. Just 1 second. Okay, GO demo account. So I'm creating a demo account. So just to let you know, usually if you want to create a demo account, there is a link on our website, okay, where you can just enter your name and email. This is what I'm exactly doing, going to the website, putting in my email and my name, and then I receive the username and password to enter the demo account, okay? So this is what I'm doing right now, just specifying the username and entering the password so that hopefully it will work. And new username. Okay. There you go. And once you log in, it automatically asks you to change your password for security reasons, okay? So you should do. There you go. I am in now. Okay, I am in now. So I will share my screen with you, which is the platform. Okay. So I want you guys to tell me that everything is, you guys can see whatever I'm sharing. So let me know right now if you can see my screen. Can you see my screen? Perfect. Can you see the platform in there? Perfect, perfect. That's what we care about. Okay. So let me now start to tell you more about the platform and what is and how to use and maximize the tools in there. Okay. As you can see, the platform has 5 different parts. This first part here is the market watch. If you can you see where I'm pointing, team? Can you see the mouse and where I'm pointing? Is it like okay, perfect. So this here is the market watch. I can add anything I want by clicking right click and going to symbols. And here I can add the gold. Let's say if I want to add the gold, I'll add the gold, which is XAU. Today we're going to take example about the gold. We're going to take example about the Dow Jones. So I'm going to add the Dow Jones as well, which is the US 30. And then, okay. I will also take example about the oil WTI. So we recently added, just for your knowledge, WTI is the Western Texas Intermediary Oil. This oil is usually from the issued in the US. However, there is also the Brent oil, which is usually in from Britain and Saudi Arabia. This also, the Brent oil, you also have it on your platform. But to know that these two, the difference between them, okay? So usually the Brent is from the UK one. Also, of course, the UK team will agree with me. And then the WTI is the American oil, okay? And because we want to make it as easy and as less, if you want, cost on the investors, we also added the future. I don't know if I have the future here right now. Maybe I do. The US oil. The future is actually the good thing about US oil future or US crude. Let me see if I have it. No, I only have WTI. I don't have this platform. We also have futures. The futures is a contract that is taken from the spot price. The WTI and the Brent you see here are spot prices. The future are only taken from the spot price, and the only difference is that it has an expiry date. The contract closes after 1 month, usually between the 18th and the 19th of every month, depends on the weekend. But that's the only difference. Now, recently, in the most recent maturity for the oil that matured in April, which we usually call it May, and now we have the new one, which will mature in June, which means around May 19. Usually, on a usual terms, when the market is not as volatile, the difference in oil prices is not too much, or it's not that far. However, with the volatility in the market we saw in the past 3-4 weeks, there was a huge gap between the WTI and the future contract of the US crude oil, of the WTI. WTI is the US crude oil team. So we found a huge gap. But another advantage of the futures is that they do not have any swaps because the contract ends after 1 month, okay? So always, for those details, I'm giving some extras, but please check with your account manager before you start trading anything so that everything would be clear and no surprises along the way. All we care about is to make things as clear as possible. Okay. So I added this and I added the Dow Jones and then currencies. Now, this is the symbol. What else can I add here? In the right click, I can go to columns. If you can see columns down there, you can add the high and low. You can add the volume. You can add the spread. Let's add the spread. Let's add the high and low. Okay. You can add as much columns as you want. Whatever you feel like you can use. I think this is more than enough when you have the spread there to know what is the difference between the ask and bid prices, the buy and the sell. Okay, I'll just increase this a bit so that you can see the prices, so for them to be clear. Okay, so in this window, the market watch, I have my most important tools in here. For the euro, I have the bid and ask, so the buy and the selling price. The ask is the buy, the selling is the bid. The high and the low of the 24 hours. As I told you before, I'm recapping, so it's good if you just, it's okay. The market opens 24 hours, 5 days a week from Monday to Friday. So when we say high and low, we're talking about the past 24 hours, okay? So this is the high of the day, the low of the day. The spread is usually a bit variable. This is the spread of the currencies. This is the spread of the oil, the spread of, what is the spread, team? It's the difference between, if you can see, to make it clear, if you talk about currency, fourth decimal point, the fourth number after the decimal point, 0.8880, 0.8882. So that's approximately 2 points. That's why you see 2 points. Sometimes it's a bit less, 1 point, 1.1, 1.7, sorry, 1.8. But it's variable. It's not always fixed. It varies, okay? Sometimes it can go even to 0.2, 0.3 on VIP accounts. So please also check this with your account manager. These how spreads varies, depends on also the initial deposit. Okay, so the spread is basically the profit of the company, the difference between the buy and the selling price. Okay, so this is my first window. Now, my second window here is if I open accounts, I will see now I have a demo account. If I decide to open a real account, I will find here under accounts another one, CFI Trader Real. Okay. Now, another thing to know is this window down there is everything you want to see about your trades. Let's say this is a new account with $50,000 as a balance. Okay. Very important. We're going to start application. Our equity and our free margin are equal to each other. So basically, equity in this case is equal to my free margin because I did not open any trade yet. Okay? My equity is equal to my free margin is equal to my balance. Once I open a trade, we can see the price movement and we can see new fields popping up. Okay? Now, I'll come back to this in a second. You see up there is a graph. This is the graph of anything you want to deal with. Let's say the pound. I drag the pound and then I can see on the screen that I'm talking about the pound against the dollar. As you can see, with the pound against the dollar, there is a time frame window or a time frame tick next to it. That is actually the time frame of my candle, the time frame of my candlestick. Okay, what is candlestick? We will have a long session about candlesticks and how to read the candle and what are a lot of very good indicators that candlestick forms. You have the shooting star, you have the lonely boy, you have many forms that candle can form that will affect your decision making in trading. We will take this is called advanced technical analysis. We will take this in a future session, a theory session, maybe this Friday or maybe next Friday. Okay, maybe this Friday or maybe also Tuesday. If we didn't want to apply, we can do Japanese candles on Tuesday, and this Friday we can or we can do, if we finished risk management today is good. If not, we'll try to finish risk management on Friday and do a session for candlesticks. But candlesticks also needs like an hour and a half to explain all the patterns and how to take advantage of the candles. Now, why am I talking a candlestick? You have in this platform also, let's take advantage of what are the basic charts that you have. As you can see on the top toolbar, as you can see up there where my arrow is, you have the bar chart. The bar chart, you can see, I'm going to zoom in. You can see the lines in a form of a bar, okay? In a form of a bar. Now, this bar is associated with the time frame next to the GBP USD. The time frame is should be here as well. I cannot see it. Let's see. It should be here. If not, let's add it. Usually, you have time frames of H1. There you go, the time frame. So the time frame you have M1, which means each bar in this graph, each bar represents a minute. Okay? I can go to H4. It means each bar represents 4 hours. I will talk in details in 1 second. What does this mean? This is another pattern for the graph, which is the line chart. It just goes in by a smooth line from start to end. Usually, investors and traders are much more, if you want, favorable to work with the candlesticks. As you can see, we have 3 types of charts. So the line, the bar, and the candlestick. The candlestick is a science, is a Japanese, they created it. It's called Japanese candlestick. They created it in Japan to interpret the market and to read the market. So in this case, each bar represents 4 hours because I picked H4, okay? So let me ask you a question. If I want to track 1 day for the pound and dollar, 1 day, so 24 hours, how many candles should I look at? If I want 1 full day, 1 day has 24, absolutely. 6 times 4, which is equal to 24. Thank you very much, Anwar. So that's it. For 6 candles, let's say in this case, I'm going to go to the chart here, March 31st. Let me just make sure this is a bit more accurate. Okay. April 28, today. And then from March 31st to April 20th, how many? April 28th. This is a whole big month. I will just zoom in a bit so that you can see actually 4 candles can represent, or 6 candles can represent 1 day. Okay. It's just getting stuck a bit. Anyways, so let me, okay, it's stuck here. Let me take an example of what I can see. Can you guys see in front of you that somewhere between end of March or March, almost March 20, up until April, can you see an upward trend with me? Can you see this upward trend? Yes, it is clear. Thank you. You know that this is part of your risk management. When you define a trend in the market for the past 1 month, usually we make the time frame a bit less. Let's say the last week. I'm trying to zoom in to see the last week, but it's not working for me. So when you define the trend, or let's say here from the end of March till end of April, you have an upward movement. So even if the market or if a candle went down, was bearish, for instance, yet the whole trend or the whole market trend at the moment has been on an upward since end of March. So if you want to enter, that's one key point to think about, okay? To think about the prices are going up. Okay, then we talk later about or another session about candlesticks and how they perform and how we can draw an upside momentum and where can we go in for a trade and where can we stop our loss and where can we take our profit. Okay, we will do an example right now. Okay, so in this case, I decided that the market is going up based on some fundamental analysis today. Some news came up and I decided to buy. I'll talk about this later in another in another slide. We talk briefly or extensively about fundamental. Let's say I want to buy team. I have 50,000. Please watch out for the numbers because now we're going to apply. When you see here, there are red and blue, okay? There are here two ticks. They differ. Sometimes they're both blue, depends if the current price is higher than the one before it. So that's why the colors change. But you can always buy and sell from this click here. It's way faster. Or you can just go for new order. Or you can also double click on the currency pair. You have the window open. So there are many ways to execute an order. Okay, now once this window pops up, team, this is exactly the same in the telephone. However, the only difference is the telephone, you might not see the graphs as clear, but this window here is exactly the same. First of all, you specify your symbol, the whatever currency or financial instrument you are working on, and then the types. We come to the types. We are learning how the MT5 works to master our trading strategy and trading technique and trading model. The market execution, which means I am buying or selling at the current market price. Okay? However, if I click on the type, I see a pending order. A pending order, it means when you click on pending order, you see type 2 comes up. Type 2, it means here that I'm placing orders in the market that are not yet executed. They are specified on a future date. When this price reaches that future date that I specify, the operation is executed or order is in the market. Clear? Okay, this is the pending order. Now we have a lot of types in the pending order. We're going to take an example. Buy limit, sell limit, buy stop, sell stop. These are the four major things. The last two, some platforms, they don't have it. So I will not talk about it. It will only make things a bit more complicated. But the first four are straightforward, simple, and you can always use them, especially with the reports that we send you, team. With the reports, you can specify a buy limit or a buy stop. When the price reaches this number that you specified, a transaction opens. Okay, I'm gonna open since I'm sharing my desktop. I don't want to invent numbers. I'm gonna open the report that we sent to you today, and I will apply a live trade right now from the numbers that we received today. Okay, this is the Trading Central. This is the report that we received today from Trading Central. This is the Arabic one. I'll open the English one. Okay, there you go. My screen is still being shared. Can you guys see this? I'm not sure if I'm still sharing my screen with you. Ah, you can see it. Okay, perfect. So you went into my email with me. Nice. Okay, good journey. So now we see this. Some people already, they received this. Some people don't. But in this, I'll go back. Sorry, I'll go back to, okay. So I'm going to go down to the pound. Didn't we say we're going to buy pound? Let's see. Here is the pound, okay? How to interpret what I'm seeing. You guys can see this, right? I cannot see if you're typing, but I hope you can see. The pound against the dollar. It's saying further advancement. 1 second, you cannot see now. Where is my email? Okay, there you go. So it's saying that the price will go up. The black one is the current market price when you received the report. It's 1.495. I'm going to open the platform on my phone just to make sure that we are on the same MT5. We are on the same trades today, because maybe already the market has jumped from this. Okay. In this report, they're saying that there is a further advance, as you can see in the title of the pound dollar, which means that it is a positive outlook for the pound today with a further advancement. Okay. This report is received around 12 p.m. CET time. I think it's, I'm not sure what time at your end, but it can be valid until now, until the US market opens, it can still be valid. But it's not always 100% accurate, team. If we get 80 or 70%, then that's really good, because that's only technical and numbers. You can add to this your fundamentals. You can have a better view of your trade. But for the sake of numbers, I came to the technical chart. It says that the market is in advance mode at the moment. In our preference, if you can read here, in our preference, okay, can you see? Yeah. In our preference, long positions, we learned this term in trading. Long means buying. So it's saying buy positions above 1.2430. The market right now is 1.2500. I have the live number in front of me, as you can see it in the MetaTrader. The number right now is almost 1.25 or 1.249. Can you see it? Okay, so this is the current market price, but the report, as we can see, is saying that the price will go up. Can you see both of them right now? I'm trying to have them both on the same window. Okay, perfect. Great. Yalla, let's then try to apply, since you can see both on the window. Okay. So here I have my little window where I want to specify my order type and the volume that I want, and then I risk manage by specifying a stop loss and take profit. Okay. So I decided I want to go for a pending order, not a market execution. If I want to go for a pending order, it says that I need to specify the price here. The chart is saying that at one point that the price is going up, 1.2510. If I say 1.2, I'm just specifying the price in green, okay? 1.2510, because that's the first resistance level in front of the prices moving up. Okay, so what I'm telling the platform now as a pending order, when you reach the price, I think I should take it a little bit more. Let's say I use the 1.25235. Okay, can you guys see what's going on right now? Okay, volume. Okay. Okay, I want to buy. I don't know why the place button is not showing. 1.253. Okay, I specify the price that I want the buy. When it reaches this price, it will buy. It should be a buy limit here. When we reach this price, I'm telling the market, please open a position for me. Okay. Now the volume, I need to specify the volume. I want to buy one contract, or one contract, it means a 100,000 lot for the pound against the dollar. Okay, 0.1, which is 10,000. Okay, sorry. And then 0.01, which is 1,000. Some platforms, they don't have the micro lot, they only have the mini lot. Okay, so GTC, you don't touch this. Okay, I don't know why these, okay, now it worked. Okay, so I'm telling the market, when you go for buy stop team, it was missing the volume. You always have to specify the volume and start for the pending order to open to be able to place the order. Okay, if the buy stop, learn what buy stop is. You're setting an order in the market at a price higher than the current market price. At a price higher than the current market price. The current market price is 1.24925. Okay, I'm setting a price at 1.2535 to buy. At this point, you enter the market with a buy of one lot. I will go for one lot because I have in my portfolio $50,000. Now before we execute, we set the price. Now let's manage this transaction by setting a stop loss. I'm not going to create number from my head. I'm going to use the numbers on the chart. Okay. So if the market price is 1.25, if I stop my loss, if it goes below that, right? If let's say it will go to a number that's written in the chart, which is the 1.243. Okay. 2430. This is my stop loss. My take profit, you take it one step above the current market price or above the price that you have specified. I want to see if I can, and now it's 2.5. I want to see if it will take 10. Okay, it took, this is okay, 1.2510. This is, I'm going only to the first resistance level. The green line is the resistance, which is the number above the current market price that is considered an important number in the market, that if the prices reaches 1.2510, they have two ways to go. Either they continue up by crossing this 1.2510 and continuing to the second level, 1.2535, or they reverse their movement and they go back down. So this is why it's called a resistance level. It's a strong line that has been specified by investors historically. I don't know how they did it. Of course I know, but I don't care how they did it. I have these numbers. I'll try to move because a lot of us don't have time during the day. We have zillion things to do. So we can just open a trade, pending order, buy stop. When the price reaches this, open the position, take my profit, stop my losses, place, and that's it. Okay, so it can take 2-3 minutes from your time. And then after 30 minutes, go in and check on your trade. Okay, so I specified the price and I have the stop loss. Now my take profit should be somewhere above my gains. Okay, to 1.2510 is where it will gonna open. So 1.2535, I did not create this. I just took the second resistance level. I put it as my take profit. Okay, now I can place my order. Now I want you to notice, once I place the order, what is going to happen to the side where it says profit? You're going to see a minus because the difference between the buy and sell here are the spread or the profit of the company. It's always going to open in the minus because at the start, when you place your order, the market deducts, the platform deducts the company profit, which is 2 pips in this example, or 1.7. And I'm opening one lot. So my point is $10. You will see here minus $17 and then, or minus 18, depends. And then we start, okay, there you go, placed. Oh no, this is placed, not market execution. I'm really sorry. This order is placed, not a market execution. So you can see here that it did not open in the market yet. I can press okay. It's just revising what we did. We bought one lot at this price. We specified our stop loss and take profit. Everything is written here, as you can see. Okay, so this is your lot. This is your price. This is your take profit. This is your stop loss. And we placed it. Now, once the price reaches 1.2510, the trade opens. Now, can you still see my screen? I'm going to go on full screen, team, because I want to show you how to calculate the profit and loss. Okay, can you still see the MetaTrader 5? Okay. Yes, I hope you can still see it. طيب. Let me tell you something now. I placed my order on the Japanese pound with a stop loss and take profit. Can you see how there is this dotted on the screen here that we placed the order? When you specify stop loss and take profit, trying to magnify so we can see clearer. Okay. Okay. The line here, as you can see, the line in green is the price that I want to buy, is the price that I want to buy this transaction on. The red dotted line on top is where I specified my take profit. Are you with me? Okay. Listen, my take profit, if I want to know how to calculate my profits, I just put the mouse on this line and I can see my profit is $250 in this case. Okay? Basically, it's 25 points. You see 250 here, but it's 25. And each point is, because they take another, the fifth decimal point. So 25 points. I put my take profit 25 points above the market price, which is very obvious because as you can see here, my price, the price that I'm going to open the trade is 1.2510 and my take profit is 1.2535. So that's a 25 points take profit. Okay, are you with me? Do you guys understand how we got the 25 points? Yes, Firas. Perfect, Firas. Thank you for the clarity. So if I want to, basically my point in a one lot is $10. Yani 25, which means 25 times 10, which is $250. But if for some reason I took 0.2 or 0.3 or something that I don't feel like calculating where the pip, I just put my mouse on the take profit and I can see my profit, which is $250 if the price opened and then it closed at my take profit, which is 1.2530. Same thing for the stop loss. My stop loss here is going to be $800. It's 80 points. So listen, in this case, my stop loss is very far. Don't you think so? Let's minimize it. We can modify our position and minimize our losses. How can we modify the position? Either we double click here and then we modify by changing our stop loss. Let's say we can go for to 1.24, let's say 50 or 60. Okay, that's like another 25 points going down, more or less. So I modified my position for my stop loss. There you go. The red button here, I just place it. No, it's still 50 points. It's still 500. I can still modify my position if you want to make your losses less than that, 1.2470, for instance. Okay, so that's modify. Okay, so this is a $400 loss and a $250 gain. Okay, now this just to check what are the profits and losses. But of course, if you want to do a risk management, always team, there is a rule here. There is a rule that says try to make your take profit 2 times more than your stop loss. This is part of your risk management. If your account can bear $100 loss, then make your profit 200. This is like a way, if you might as well, if you lost $100, okay, fine, I lost $100. But if I win, yes, try to make it double your losses. Okay, this is a 2-to-1 rule. It's a percentage rule, which is they use it in trading. Try to double your profits than the stop loss. Okay, now we're going to talk about this later, but as I said it now on application, I'm mentioning what we will be covering later on. So that's one rule also for risk management. Another rule that we just learned about, team, which is the specifying my constraints in the transaction. Okay, a third thing that I still want you to know, at the moment I did a buy stop. I'm going to do a market execution transaction on the gold. Let's take another example. Let's take the gold right now. I'm going to drag and drop the gold here. Okay, as you can see, this is remember I talked about the Japanese candles, right? And every candle in my graph here represents 4 hours. This means that also this will be a very condensed training session. If a technical analyst heard me, he will hate me probably, because talking about this very fast is not good for technical analysis, because this is really a science and really needs an hour or two of explanation for the Japanese candles. But just for you to know, each candle in this case represents 4 hours. The price on top, as you can see, there are threads, or they call them strings, right? In each candle, you see a string. The top of the string is the highest price. The bottom of the string is the lowest price. Okay? So in this case, the highest is here and the lowest is here. And everything, the open and the close, are the limits of the bulk of the candle, of the body of the candle. Okay? So the body of the candle, or everything that trades between the open and the close, this is the distance, is a 4-hour trade between the open and the close. This is the body of the candle. What is the best time frame to buy? There is no best time frame, Firas. Some people are scalpers. They like to use minutes. They like to use 30 minutes. They like to use 1 minute. But for indicators to be effective, the bigger the time frame, the better it is. Okay? If I want to add, most of you, they know some tools that are technical. I'm going to just add one technical tool, which is called, it's an oscillator, which is called the relative strength index. There are 3 types of indicators, guys: the oscillator, the volume, and the trend indicators. As you can see here, the trend indicators, the oscillators, and the volume. Oscillators, they measure the in English, oscillator, they measure how much there are buyers and sellers in the market. The word is called, it is an oscillator, but it's like the density of the buyers and sellers, okay? This is very important. While the volume is usually just the number of people that are buying and selling, but usually oscillator is a bit more indicative. And then you have the trend. The trend, also moving average falls under the trend. I will explain this in a minute, or I will explain this also more in brief. But RSI is very important. I will add, I'll keep the defaults. When you want to add something, keep the default. It has a 14 period, which means it takes 14 days before, and divide them by 14 closing prices, closing 14 prices, whether was it a 4-hour, was it 1 day, 1 week, whatever it is, 14 consecutive trades, and it divides them by 14. There you go. This is your RSI. The RSI, for instance, moved between 30 and 70. Team, we're talking technical analysis at the moment. This is another rule you can use it in order to enter a good trade. In this case, RSI has a definition. It measures the oscillation of supply and demand in the market. Richard, it depends on which market you are interested in. For instance, there tend to be most volatile around. I think Richard, he's asking, Richard, he's asking about the time frame in the platform, not when to buy and sell during the day. So this is what I think Firas meant. Yes, no, it's fine, Richard. But Firas meant when is the best time frame, like day 1 or H4 to use it. Okay, so that's why I was saying you can. Some people, they use minutes if they're scalpers and they want to buy and sell. But for technical indicators to work, it's better to use a 4-hour or a 1-day chart. Okay. In Japanese candles, when we interpret some trends that are known, or some shapes or some models that the Japanese candle form, end of an upward trend, end of a bottom trend, when will some trends be formed, like the head and shoulder, like an inverted hammer, like a hammer. These trends, usually, they are best indicated on a daily or on a 4-hour chart, okay? But if you are a fast trader, then sometimes you use the minutes. So it's just a matter of choice, okay? But if you are a technical indicator, you would be using yes. Usually the dark candles depends. Actually, you know what? Let's double check that, Hussam. That's very interesting. Let me tell you, this is a platform where you can customize the way you wanted. Usually, the white candles, I'll double click here on the Japanese candles so that we can, or on the chart here, you can go to properties and you can change. You know, when you start with the MetaTrader, it's usually a black screen. And I just made it white for it to be easier to look at, okay? So you can specify the background. I specified that I want the background white and the foreground black. Now, bar up, I will change it because you are right. Usually the white bars are the bullish candles, okay? And the black are the bearish. So I'm going to switch it so that you don't confuse. Thank you for the question, Hussam. So I'm going to specify, it's your total choice. You can go for red and green, but I'm going to stay with black and white. The bar up, I'm going to specify it as white, okay? The bar down, I'm going to specify it as black. The bull candle is also in white. Oh my God, too much white in here. Okay, 1 second. Okay, the bar up is just the shape of it. The bar down, okay, the bull white, the bear is black. This is what, perfect. That's what I want. This is what I want, okay? Can you see what I did? Is it clear for you guys? You can just go customize. You can specify that everything, that the bar up and the bull candle in white, the bar down and the bull candle, the bear candle in black. So this is clearer now. All the white candles are like the green candles if you want, and all the black candles are like the red candles if you want, okay? Which means if there is a black candle, it means the open was higher, the close was lower. Got me? Close is higher. The dark, usually, no, the dark, the close is lower. Okay, in this case. But Hussam, you are right. The previous one was what you mentioned. But usually this is clearer, okay? Because everything that's black, green and, okay. Yeah, it's a preference. Absolutely, it's a preference. But as long as you understand the concept, so and if it's a white candle, it means the open, the close actually is higher than the open, as you can see. Okay, the close, it closed up in this 4 hour higher than the open. So that's why it's a white candle. You can always go for red and green. Okay, so I'm going to go for a market execution. My transaction is still pending in gold. Another example that we are applying here. Okay, so as we said, we can either go for new order or we can just double click on the gold. Okay, I'm going to go for a new order. Specifying one lot, which means 100 ounce. Okay, I'm going to go for market execution. So I am applying a trade, which is going to open straight with the market. Okay, volume 1, it means 100 ounce. I'm going to go for, let's say, 0.1, not 1. I'm going to go for 0.1. So that's a 10 ounce. I'm going to buy before, without putting my stop and take profit, but please never do that. We're going to go back and modify. But let's say you decided to grab the market fast. Some news came up when the US market opened. Interest rates are going down. We have interest rates tomorrow, by the way, in the USA. Tomorrow is Wednesday. Yes, tomorrow at 9 p.m. we have the interest rates, which are expected to be unchanged. But if for any reason the interest rate go down, now it's 0.25. If it went down to 0, you can expect the gold to pop up. So at this right second, at 5:30 Dubai time, which most probably is 1:30 UK time, you can go in the market when the US market opens and you can buy gold if you are a fundamental analyst and a fundamental trader. You're trading on the news at the moment. You know that there is a news coming up from the calendar, okay? So and usually gold and dollars, they work oppositely. So if the interest rate went down in the US, it means the dollar is affected, which means that the gold will go up. Because as you can see here in the chart, XAU against dollar. So if the dollar goes down, the XAU goes up. However, please listen to me. If I went in after 1 hour and still bought gold, I might be too late. Don't come and tell me, Reem, you said that if the interest went down, the gold will go up. This is a news. and news, they are very hot. They are on the second. They affect the market probably 5, 10, 15, 30 minutes maximum. And then people start doing the opposite in order to gain profits. So if they bought, you will have a lot of saturation of buyers. People start selling. So you need to know how to trade the news, okay? This is the pure fundamental analysis. So I'm going to buy here without specifying my stop loss or take profit. Now, please watch out for the profit and loss, the amount that the company would take as a swap or as a profit, and then check the margin. We're opening 10 ounces. Okay, so in this case, my margin is $180. Now, team, listen, this is this platform is a leverage of 1 to 100. However, it differs. Some in some entities we have a leverage of 1 to 30. Other entities we have 1 to 50. So, but for the sake of calculations, easier calculation, I'm taking an example of 1 to 100. Okay, so in this case, the one lot of gold, which is 100 ounce, we take 1,800. Because we're taking 0.1, it's only $180. Okay. So when we open the trade, we directly saw minus $10. That's the profit of the company, or that's the swap, or that's the spread, not the swap, sorry, the spread. That's your spread, okay? The difference between the bid and ask. Okay, as you can see here, we didn't specify stop loss and take profit. You can always go back, double click, modify. You can always stop your loss and take profit. You can either put numbers or you can go back to the report, okay? You got me now, right? You can go back to the report and specify that you want, I don't know, maybe let's see, I don't want to guess. Let's go. Now the price is 1,711. I'm going to go to the chart where you can see it in front of me, I hope, in front of you guys. I'm going to go down to the gold. This is the gold spot price. It's saying that the gold prices are going up today. When we received this report a couple hours ago, the market price, which is the black one, was 1,700 an ounce, okay, and 9. It's saying that the gold is going to go up to 1,718. So let me go back to my trade, my platform, and I will specify 1,718 as my take profit. Sorry, my take profit is 1,718. And my stop loss is, we can go less, as we said, we try to make the profit double. So we can go less. Let's see, let's say 1,705. Okay, there you go. I modified my trade. And if you want to see how to calculate or what are my losses and profits in this case, we bought at a price of 1,711. We want to take profit at 18. Okay, so that's, if you can hover the mouse here, that's almost $60. Okay, that's almost 60 points. This is it says 6,000 because we calculate 2 digits after the decimal point for gold. Okay, but basically, if you want to take the before the dot, that's a $60 okay movement, or a 6-point movement. So that's how we get our profit here. Our losses, okay, we hover the mouse here. We have a 69 losses, or also almost a 7-point movement down. Okay, so this is how you specify your stop loss and take profit, and this is how you know what are your actual dollar value of your profits and losses. Okay, let's go for the Dow Jones. You asked me about the Dow Jones. I'm going to open the Dow Jones right now before I trade. I'm going to drag and drop the Dow Jones here so that we see how we calculate the profits and what is the pointing system in the Dow Jones. So the Dow Jones is an index, is a US index, as you guys know, which sorry, I just read, okay, why I can't buy, it does not allow me to buy. George, are you talking about a real account or a demo account? Dummy account. Dummy or demo. George, if you're talking about a real account, make sure you have, okay, you should be able to buy, but and to sell very normally, but make sure you are picking the right, maybe if you chose elite account, then you are probably is it like in gray, you cannot press on it? If it's in gray, then you might find another XAU because you opened an elite account maybe. Yes, it's in gray. So you need to open another XAU. If you can write in the box, in the symbol where we have said a minute ago, you can add the XAU, you can find another one. It might be with an underscore here. Okay, this is the one you might be able to trade if you opened an elite account. The elite account has less spreads. Okay, this is a VIP account which has less spreads. So please double check this, but it should be working fine. Okay, George, I will move on. So let's drag and drop the Dow Jones in this case. Okay, perfect, George. Okay, so the Dow Jones here in the past 3 days, I don't want to go far. In the past 3 days, on a candle of 4 hours, I have an uptrend on the Dow Jones, as you can see, right? If I want to draw just a trend line, just a very, very simple trend line, I can see an upward trend on the Dow Jones. We studied this in school, like you need 3 points to draw a line, right? So right now I drew a line, which I can tell you that the Dow Jones, but it's not a very steep trend. In the past 3 days, it's almost going up somehow into a flat, going back into a horizontal movement. But at the moment, it's going up, especially that we have a very, very bullish candle that opened, which is a sharp candle, as you can see in the past 4 hours, that has opened and then closed on a price which is higher than the open. But then here we see another black candle forming. So it seems like the prices are hitting a sub-resistance level. So they might change direction. Team, please listen to me carefully. I'm just analyzing at the moment a trend line, 1. I'm trying to interpret the candle, 2. Let me take an indicator, which is the RSI that we just added. Didn't we add the RSI? Okay. The RSI moves between 30% and 70%. What does that mean? The RSI is the relative strength indicator, which measures the strength of the buyers and sellers, or the capacity, or the oscillation, or the amount of the people buying and selling in the market. At the moment, we have over 70% buyers, okay, which means that we can see with this, the 70%, the RSI at the moment is above 70. And as you can see here, it's more or less smoothing up, is more or less straightening up, getting parallel to the line, right? So one momentum, RSI, one indicator, one oscillator indicator shows that we have, what does this mean? How do we interpret? How do you interpret an RSI, which measures how many buyers and sellers in the market of above 70? What does that reflect on my instrument here? That we have an instrument of, come on, Majdi, tell me. Yes, what does this indicate? Strong buy, absolutely. At this moment here, we have a saturation of buyers. A lot of people are buying, okay? So this is an indicator saying that it might flatten up. It might flatten up, okay? It doesn't mean that it's going to go down. It might stay up. Look, here it stayed up for a while, as you can see. Here it also stayed up for quite some time. It doesn't mean it has to directly go down. However, at the moment, we can see that it's flattening. It will go down gradually. It will not, it might stay up for another 1, 2, 3 days. I don't know. But sooner or later, it is an overbought situation where people are gonna sell to make profits, okay, to activate the profit receiving from the market. So this is one oscillator that's giving me an overbought, that's giving me an indication of a buy. People are buying. And then we have a trend of upward trend in the market for the past 3 days. And then we have 2 sharp candles here that are really going upward, but here we can see another flattening. So that's another 2 equal signs. A third indicator I can now use is my moving average. You see that red line? That red line here is a moving average. This moving average is usually, I added this, I think I added this a while ago with you guys. I'll keep it the same. This moving average, as I told you, 14 periods. It takes 14 trades. It's a simple moving average. In this case, while I'm using a 4-hour chart, okay? What are the recommended periods? What do you mean? Okay, now I understand. In a simple moving average, you can add as many as you want, but I usually keep the default. The default is 14, keep it as 14, okay? If you're using a 4-hour candle, keep it as 14. If you're using a bigger one day, maybe you can go for a 52, okay? So it's up to you. But I usually keep the defaults that are in the system. The default here is 14. I keep it as 14, okay? But if you want to go with higher periods, let me do what you asked me for. You want to go for 52. Let's go for 52. It can be, you see, when you go with a bigger period, the curve flattens up. So that's why I prefer smaller period. When the line flattens up, it doesn't give a lot of indication, okay? So the closer the periods, the better the indication on a 4-hour. In this case, as you can see, the moving average team, you have to interpret a moving average is another momentum indicator, or is another indicator on the chart. When the prices are below the moving average, it's as if the moving average is pressuring the prices, okay? The moving average is above the prices. While here, if the moving average is below the prices, as if it is supporting the prices to an upward momentum. So as you can see in this chart, we were only supposed to buy and sell, but I'm talking in general, a little bit of decision making, okay? So decision making in technical analysis at the moment. We specified a trend, we're talking about the moving average, we're talking about RSI. So all the indicators here are specifying or are saying buy in the short term, okay? Exponential moving average are also very important because they don't only take the simple moving average only takes the closing prices, okay? Exponentials has more variables in it. So it doesn't only take the closing price, it takes a lot of variables in it. So usually simple is as simple as only closing price divided by the number of days, okay? You can also take exponential. You can draw as many moving averages as you want on the screen and accordingly make also a decision, okay? But they all fall under the same momentum indicator under a moving average. I prefer that you go for a variation, RSI, moving average, trend line, and a candlestick. If you guys know these four, you can really have a good decision in the market, okay? We still didn't learn anything about Japanese candles. I would tell you, we didn't learn anything. We have a big session about what do they form, what does this mean, okay? We have a very big session about candlesticks that's very, very, very important. Even this is a technical candlestick indicator. So please bear with us. Maybe on Friday we will explain this technical analysis. Okay, so let's go back to application. All my indication here is saying that the Dow Jones is going to go up. Now I open the technical analysis report that I received. I go to Dow Jones, and it's also saying that the price is going to go up. So apparently our technical indicators or our technical analysis, the brief one that we did in the past 5 minutes, is moving along that buying momentum, okay? So I double click on the Dow Jones, new order, and then I want to buy, okay? On the market execution, if I'm buying one lot, it means I'm buying 10 indices, okay? With me? Anyone is asking a question? No. Okay, great. I'll go back because I was checking if anyone has any questions. Okay, so let me buy 0.1 also. If I'm buying 0.1, it means I'm buying only one index. Or let's keep it as one. Let's keep it as one. Okay, let's buy one Dow Jones. Okay, I didn't specify my stop loss and take profit. You guys know by now how to specify it, and please always do. Stop losses are very important. If you don't want to specify your take profit, fine, but always specify your stop loss. This means you know how to manage your risk, okay? So we opened the Dow Jones at the moment. We bought one lot, okay? The margin of one lot is approximately $3,000 or $2,000 something. It depends on the percentage that has been specified with you and your broker. Usually to calculate the margin, team, you say that one lot is equal to, I'm going to go back to the PowerPoint presentation. If you have any questions, Majdi, I'll come back to you. If you have any questions regarding the margin calculation, I will say it briefly. Okay, when you want to calculate your margin, you need to know your volume. If you're talking about one lot, it means you're talking about 10 indices. So you multiply 10 by the number or the value of this Dow Jones. So the Dow Jones, let's say if it's 24,000, you multiply 24,000 by 10 as it's your index. And then you multiply it by the percentage that's usually the margin percentage. Usually it's 3%, 1%, 2%, depends. It varies, okay? But you can always know, because we usually vary our margin, depends on the volatility of the market. But please get back to your account manager or to me at the day you want to buy, you have a real account you want to buy, to know what is your margin exactly. Because after all, you don't want to exceed a 25% margin from balance, okay? If you don't understand, please ask me. Okay, let me go back just quickly to the platform. Moving average periods crosses, what does this mean? Okay, I will tell you what does it mean. Okay, let's go back to the Dow Jones here. We bought, as we said, we bought one lot. It means we bought 10 indices, and we have the margin. Everything is calculated together. The margin of the gold was almost 180, so the margin of the Dow Jones is like 3%. That's $33,500. That was the margin of your Dow Jones. Now, to know what is the profit and stop loss, to know how much you want to calculate your profit and losses, you need to specify your stop loss and take profit in order to see where are your entry and exit when you close this position. I'll go back to the report. As we said, we bought, because everything was saying buy, from 24,300 to 24,500. Apparently, the market already hit the second resistance level. So a resistance level is another key indicator, key technical indicator. The market already hit the 24,500. I will still buy, okay? Because it's saying long positions, as you can see, our preference, long position above 23,770. It crossed 23,770, it crossed 24, and now it's 24,500. I will just put 100 points up, 100 points down in the platform, okay? So it already reached 24,500, which is good. That means the report today did its job. The US market just opened, team, by the way. The US market just opened now at 5:30, which means that the prices now is a pre-market open. As one lot, if I want to specify my stop loss, I just want to go 100 points less, so 24,400. 24,400, and 100 points up, take profit 24,600. Okay. However, as I told you, you can go less with your stop loss, let's say 50 points, and more with your take profit 650, 450, 550, 650. Let's modify. What happened? I didn't modify. 1 second, let me close it because I don't want to. Bad decision. Okay, I'm gonna go again to. I made a mistake, sorry. I didn't modify, I adjusted the position, so I should have modified. Okay, so again, I'm buying one lot. My stop loss is 24,450. My take profit is 24,650, 24,650, 24,450. Okay, buy. I'm buying one big lot of the Dow Jones with almost 3,500 as a margin. So I should have in my account minimum $15,000 to be able to buy one lot of Dow Jones to be safe, to be in a risk-free position, because I'm only using 25% of my balance. Please, not more. If you are opening one big lot with a 3,500 and you have a portfolio of $25,000 or $20,000, okay? Type. If I want to see where my profit is, here is my profit, which is approximately $1,400. Okay. So my point in the Dow Jones is $10. When I say $10, it's not after the decimal, as if I'm calculating from 24, as I told you, from 24,500, I'm taking my profit at 24,650. So that's 150 points, right? 150 points times $10, that's a 1,500 profit. Okay, 1,400. Now for my loss, I specified it from it was 24,500. I classified my stop loss at 24,400. Okay, that's approximately. I think I put it not 400. Let's see. Let's take the modify to a stop loss 24,450. So from 24,500 to 24,450, that's around 50 points times $10. That's like a 500 loss. Okay, did you get the calculation of this, guys? Mustafa, you were asking me last time about the Dow Jones. Did you know now how we calculate the profits and losses? Oh, you're still with us. Yes, yay. Great. So you always take the point before the decimal as $10. The movement is considered $10. Oh, you're welcome. That's my pleasure. Okay, so that's the application for the MT5. We can also, do you guys, what time is it? Wow, it's already, okay. I'm going to go back to the presentation. We have, I think we did enough examples. I'm going to go back to the presentation briefly. Okay, just to tell you, at the moment, I told you we're going to divide this into 3 sections. We learned about how to execute on the market price and what are my pending orders. And next time I will go, we can also do application and go over more pending orders. Okay, we talked about some risk management rules during the application. I will go into this in a second. Okay, so we're almost done with the first 2 points. And I also talked about a little bit of technicals and fundamentals and market trends. So I was trying to gather all of them because we were applying. I will go a little bit deeper in each and every one along the way. It's not going to take a lot of time. Now you already know basically what the ins and outs of the MT5. Okay, so it's not going to take a lot of time. These are just great coverage. Well, you're welcome. That's my pleasure, to be honest. Our purpose here is for you guys to learn and to be able to use this platform with a total a good entry in the market. Okay, because a lot of people go in and they don't know what's going on. So after all, we're here to try and make you guys understand and minimize your risks. Okay, so for a successful trading technique, as I have mentioned when I started, okay, we need to go for risk management. When we say risk management, it means what I have just showed you on the platform, specifying my stop losses. SL is more important than take profit. Stop loss is more important than take profit, please. And I will go over the rule that I just talked about, how to specify your stop loss. Market execution is specified on the market. Pending order, a future date. Okay, risk management, what goes under it is specifying my market trend. If I have an upward trend on a 2-day, 3-day, 1-week chart, market trend, to specify your market trend. And then you have the fundamental and technical analysis, which is all 3 of them goes into a market risk analysis. Okay, so trying to identify a trend, having a stop loss, going for some technical indicators as we have specified, and talking about some news as a fundamental analysis, we will have a good package of minimizing our risk. Can I trade against the trend for daily speculations, Majdi? Daily speculations, yes, you can if you want, but on a daily, look the high price and sell there. Look to the high price. Okay, how do you specify your high price, Majid? You can specify your high price by the resistance that's given in the report, or by candles. You look that this candle is on a high level, close to a candle that was on a high level maybe 2 days ago. So you expect at this point the price might reverse. You can here put SL stop. You can also go for a pending order. Yes, you can. If you want to go for market executions, that would be pure fundamental more than technical. Okay. If you just want to go, as I was just saying, if you know that there is the tomorrow also in Europe, we have a very important news about the GDP, which means the gross domestic production, which means the company, if it's the economy, if it's contracting or expanding. Okay. Expectations is a hard drop because everything was locked down, as we know. So you can, at this point, when you know that the euro is going to be hitting, you can do a sell and take advantage of this. However, if you enter after a while, you can speculate and go against the market. It's up to you, okay? But this is pure speculation. Here we are trying to minimize speculations and try to use technicals and use fundamentals. Okay, so let's go fast since we know the risk management. Now, when I said risk management, I need you to go into details more about the rules that we covered fast, okay? Trading in the financial market involves high risk, as you guys realize. Here I have some pool of ideas that if you can gather, we can have a better trading decision, okay? So, first of all, sessions like this really help you, really makes you more experienced. Even if you make losses, it's totally fine. This is how you learn. Don't lose hope. On the contrary, if you don't make... Warren Buffett, the big billionaire in the USA, this man, he kept saying, learn from your experience. I am where I am because I failed so many times. So it's okay. If you failed, if you made losses, it's okay. Just keep on going and try to learn. Maybe you didn't specify a stop loss. You lost. When you don't specify a stop loss, team, it means you have 100% risk in your portfolio, okay? This is like not something smart to do. Okay, so training, as I said, stop loss. You always have to specify your stop loss. Now, follow the trend, as I have mentioned there. Follow the trend, upward, downward, usually flat trends or horizontal trends. You can go for speculation measured up and down, but they're usually not very indicative to go in the market when it's a flat horizontal trend, okay? Especially on a 4-hour frame. Capital and leverage. Always know the leverage and the capital that you are starting with. You're starting with $50,000, you're starting with $100,000, leverage 1 to 30. Know what are your capital and what is the leverage in order for you to know what can you control, which contract can you buy, okay? Now, the 3-to-1 rule. The 3-to-1 rule. I have mentioned a while ago about always double the profit and make the losses. Let's say if you want to go 10 points loss, make your profits 20. Okay? This is a 2-to-1. You can go for 3-to-1. How can you do that? If you go for a one trade, 5 points on your stop loss, 10 points your take profit. That's 2-to-1, right? You open another trade where you go for 5 points losses and another 10 points losses, another 5-point losses and another 10-point profits. That's the 3-to-1 rule. So even if you lost on one trade, you will try to recover it from another trade. If you open 3 trades, in each trade you have 10 loss, 5 gain, 10 loss, 5 gain, okay? Or this way, your losses would be more, as you can see. Yes, of course, Hassan, I will. In a trading, in the platform, when you want to specify your stop loss, yes, if we're trading on the same one, let's say pound against the dollar, I specified my stop loss 5 points below the current market price. Let my take profit be 10 points above my current market price. Okay? I can open this way. I'm on a 2-to-1. Yes, this way I'm on a 2-to-1 risk. Exactly. I'm on a 2-to-1. So if I lose, I'm losing only 5. If I win, there you go, I'm winning 10. So in my coming trade, if I specify the loss and the gain on a same amount, I break even. If I specify a 5 and a 5, a stop loss and a take profit, 5 and 5, I break even. However, if I double again in this trade, if I double again my profits against my losses, in this case, if one trade loses, this trade also uses, I open a third one and do the same thing. This is 25% risk. So in this case, you kind of manage your portfolio. 25% you might risk losing, but 75% you might gain actually. If one of those three gave you the double gain, you are fine on your losses, okay? So even if you lost 3 times, this chart here explains it even more. This chart here explains it even more. Let's say I specified 100 points or $100 loss, okay? In my first trade, I lost $100. In my second trade, I lost $100. In my third trade, I lost $100. I go for a fourth trade, okay, and I specify 300 points gain, 100 point loss. So usually a 25% rule manages this, works this way. This is part of risk management, okay? I know it's a bit complicated, but this is a rule. If you open a first trade, try to make your profits double your losses. If you want to make them equal, then this will break even, okay? This will break even. You might win, but if you decide to open another trade, trade on the same scenario of price and put them at once. Yes, exactly. If you think like, if you want to, because after all, what we send you in the reports, now the report that you receive is a market execution, but we also have an Arabic report. I don't know if you guys receive it. We have pending orders where we usually put pending trades in the market and we specify our take profits double the stop losses, okay? And we open the opposite trade. We open a sell where we specify our take profit double the. So we usually do go both ways. So if one lost, the other win. It's either you're going to break even or you're going to make profits. Okay, see, that's what I'm trying to tell you. That's like a 25% risk. What do you mean for the second target, not the first? I will move on fast. Majid, if you can explain to me. There is also one rule that we need to know, which is the 2% rule. 2% rule. It means when you know your capital, when you know your leverage, when you know the instrument you want, and when you specified your stop loss, make sure you do not lose more than 2% of your trade. Okay, so let's say if you started with $20,000 now, okay, and you decided to open a buy for euro, and the euro went down 400 points. The euro went down 40 points, and I have a one lot. My point is for $10. That's a $400 loss. A $400 is 2% of 2,000. That's my maximum. If you guys decide to specify your stop loss, always go for the 2% rule, not more. 2% of my capital. Okay? So this is also another risk management approach. So 2% rule, 3-to-1 or 2-to-1, depends on the number of trades. It can be 4-to-1. Always try to double your profits from the stop loss, or open couple of trades doubling and one loss, or open opposite trades. One is buy, one is sell, one is buy limit, buy stop, one is sell stop, where you can also, if one didn't work, the other works, then you close. This is a pending order. This is a way to manage your portfolio. And then definitely, as we said, the volume, you specify the volume. If you have a 20,000 portfolio, you can open one lot. But if you're starting with less than that, I don't advise you to open a volume of one lot. You go for 0.1, okay, or 0.2 or 0.5. If you're opening 100,000 lot, 100,000 portfolio, you can definitely go for 10 lots, okay? And then, as I told you, the stop loss, the following the trend, knowing your capital and leverage. These are 1, 2, 3, 4, 5, 6, 7 techniques that we use in risk management in order to minimize our losses, okay? Or at least manage our portfolio and manage our risk. Another way to manage the risk, as we have specified in the table above, now we talked about this, we talked about the market trend. I'm going to talk about the fundamental and technical briefly, team, before we finish this session. I know it was a condensed session. I hope you guys took good note about it, because many important things we said in there. Technical analysis, we're going to have a lot of sessions about this. We have a session about technical models. We have session about trend lines. We have sessions about Japanese candles. These are technical indicators or technical analysis that if you guys are interested to learn more about, we will have live sessions about them. If you don't want sometimes some people would tell me, I don't care knowing the technical if I have my support and my resistance level. My resistance are on top of the current market price. My support is below the current market price. These are very important to know where to stop loss and take profit sometimes, okay? So if you don't want to know, at least you need to know the Japanese candles. It's very important, really very important session and very fruitful, and you will learn a lot about it, okay? So Japanese candles are very important technical analysis tools that are used by most investors and most even people who train, okay? So we're going to do a session next time about this. And then the fundamental analysis, we have talked briefly. That fundamental basically is anything that you see in the market that has to do with politics, that has to do with financial statements. Now we are on a financial statement period at the moment in the USA. Today, this week, actually, you have financial statements of Apple, Boeing, Facebook, many technological companies, social media, very important companies are issuing their financial statements. And when you say financial statements of those big companies, it means they are present in the Dow Jones. They will affect the movement of the Dow Jones. Amazon, for instance, was one of the top companies to perform in this quarantine period because everyone was moving to online, to buying online, to working online, to everything. Everything was, even Netflix had very high demand for the past month because everyone is home watching. So these are stocks that we know that are probably performing well, and their financial statement would probably be positive. Unlike Boeing, for instance, because everything is stopped, you might see losses in there. And Boeing is one of the, I think it's number one besides Apple, which has the most trades in the Dow Jones index, which has a good market capital in the Dow Jones index. Can you send this session so that we can review it more? Of course. I have recorded this and I will download it and send it to you. Yes, sure, George. But make sure you are in the group because I already made a group for everyone. If you are not, please tell me so I can add you. Are you in the group, George? I know Majdi, Ayman, Haitham, and Hussam I need to add. So please let me know. Okay, perfect, George. Okay, great. So these are considered the fundamental analysis, the financial statements of the companies, and economic indicators, as I said, like interest rate. You can see here. Let me go a slide further. Okay, this is the calendar. This is the agenda. This is a website that is used by everyone. To be honest, you can also use it. It's a website that's called Forex Factory. It has all the important news. They indicate them as red. This is fundamental analysis team. They indicate them as red, which means they have high impact on, in this case, look with me. In this case, advanced GDP, which means the gross domestic production, which this indicates if the economy is growing or if it's contracting. The GDP gives this indication. In this case, this is red, which has high importance on the dollar currency. It's issued at 4:30. This, I think, is Beirut time. I think it's 5:30 Dubai time, and it's 1:30. Please, when you go into Forex Factory, you can specify the time frame, okay? You can choose that you are in UK. You can specify the time frame. This way, you will know when are these indicators issued. So, GDP, as you can see, you have actual, forecast, and previous. So the previous, it means the previous quarter. So we're talking about September to December. There was an expansion in the economy of 2%. However, the forecast, which is from January to end of March, there was a contraction of 4%. This is a huge number, which is only just normal with the lockdown. So in this case, you will know that the GDP, if the actual number came close to the forecast, 3.9, which is actually, it's going to be bad. It's going to be heavy on the dollar. It will weigh on the dollar. However, if it came, team, listen, the forecast is more important than the previous. You know that if the actual came at 3.5 minus, it's considered better. It's considered a little less aggressive on the dollar because the contraction is less than what investors predicted, which is supposed to be a good indication. So when the actual figure is announced, always compare it to the forecast, not to the previous. Okay? So in this case, this I think is tomorrow or today. Let's see, I think this is tomorrow. It's Wednesday. Wednesday you have the GDP and you have the FOMC. These are the important news of tomorrow. Remember, it's forexfactory.com. You can find all the news in English of whatever you want to follow the fundamental analysis of that currency. Okay, so in this case, if the dollar go down, you know that the euro is doing better. Okay, that you know that the gold is doing a bit better. So this is how you take advantage of the platform of buying and selling. This is a fundamental trade or a fundamental based trade. Okay, so let me move on to try and close this session, team, before we finish. As I said, never open a position without your stop loss, please. Okay, if you open a position without a stop loss, you are at 100% risk, which means a bad money management. Okay, for your action plan, know those 4 by heart. Step 1, you understand the platform, which we just did. Practice, practice, practice. Step 2, you'd specify the main trend of the market, of this instrument. Is it an uptrend, downward trend, or horizontal trend? Step 3, you study your fundamentals and technicals. When I say technicals, you don't have to go into those indicators that we said. If you check the report that you receive on a daily basis, you have support levels and you have resistance that are above, you have support that are below. They are more than enough to give you 70% indication of the price movement. 70%, team, as much as I wish we can do it perfectly fine, but even the best analyst can never guarantee 100% risk-free. There is always 30% risk, 20% to 30% risk. Okay. Step 4 is to know the tools to manage your risk, the ones that we talked about, the 4-to-1 or the 3-to-1 or the 2-to-1, the 2% losses in your trade. These are the rules that we learned about risk management. So try to, when you are into this and you are going for an action plan, keep this in mind and try to place your trades based accordingly. My God, I talked a lot. I hope you guys understood what I was trying to explain today. And yes, Fatima, I will add you if you have specified your numbers. So I'm adding Hussam, Majdi, Ayman, Haytham, and Fatima. Today there was training about gold and oil. I sent you a message. George, to be honest, I saw your message, but there was no training about this. Was the only session. I will double check. Maybe it was an old session. I'm sorry for that, George. I will double check, but there was no session. Okay, this was the only session that we have applied today. To determine the trend, listen, I would rather you go with a 4-hour, but if you are a scalper, you might take less. But 4-hour is a good time frame. Sometimes even the daily, if we're going with Japanese candles and technical trends that we will learn more later on, sometimes daily can give you a better indication for technicals. But for at the moment, for support levels and resistance and for fundamentals and the reports that you receive, a 4-hour is a good indicator. When you go deeper, maybe 1 day is also good. Why should be a difference between the two report, please? The market and the pending. Okay, listen, guys, we receive there are 2 technical reports that you receive. One is the one that is in English. You are supposed to have it on your email. Okay, the other one is just an extra. What was the question? Which is the best frame? I'm saying, Majdi, I was just saying, sorry, Arar, I'll get back to you. Majdi, I was just saying that At the moment, 4 hours would be a good indication if you're only specifying support and resistance and basing your trades accordingly. However, later on, when you go deeper into candlesticks, the bigger the frame, the better the indication of the candlestick is, okay? But it's just a matter of choice. What are the tools you have in hand that this way you will know what is the time frame you specify, okay? If you are a scalper, maybe you can never work with a daily. You'd rather go for minutes. Okay. For what? Weird. Can you guys hear me? He's saying there is no voice. Okay, Majdi, I will send you this. I will send the record and you can hear my reply. Okay, so that I won't repeat myself. Okay, I hope you guys can hear me. So team, at the end, I would thank you for watching and for attending. Arar, you just asked me one thing. Yeah, there is a basic report that you receive on your email twice a day, okay? European market open, US market open. If you do not receive it and you have a real account, please talk to your account manager or message me on the group and I will check who your account manager is to make sure that you receive it. If you are only working on demo account, it's okay. If you're interested in the real account, it's okay. We will start by sending you this report by mail. The other report, we do it internally, in-house. Team from Jordan, they do these analysis. They are pending orders. It's also very accurate and very important. However, it's just an intern, it's an addition. If you guys can start working on the one that you receive by email, it will be enough, okay? Okay, you're welcome. Yeah, sure, Ara. I hope I answered your question. Okay, if not elite, what type of demo account should we open? You only have the elite and standard, okay? Just differ. What differs is only the spreads, the commission of the spread, the difference between the bid and ask. You're welcome, Hamad. Team, I will send you the report as I have added a couple of more people. If anyone else need it, please say it now or hold it forever. Okay. Was happy to be here. Perfect. Also, you guys can also message at info@cfifinancial.co.uk or the number of Richard. He also kept his number on the chat if you guys wanna call him or get in touch with him. Have a good evening, team, and hopefully we catch up either on Friday or next Tuesday. The session is going to be about Japanese candlesticks, most probably. I hope everyone agrees. If you have any other input for any other session, please also let me know on the group or by message. You're welcome, Firas. Have a great evening, guys. Have a great evening. Bye-bye.